We'll do one more exercise. I will do one more exercise out there. One more exercise, similar, one more exercise out there. Let us look at problem number, in this particular case, problem number 3 out here. Why problem number 3? 2, you can do it yourself, that is not a problem. I just got some numbers out here. Let us look at one more problem. Minton Company is a wholesale distributor of premium European chocolates. The company's balance sheet as of 30th April is given below. There is a balance sheet, beautiful balance sheet given out there. The company is in the process of preparing budget for the month of May, that is, please note here only 1 month, and has assembled the following data. Sales are budgeted at 2 lakhs for month of May. Of the sale, 60,000 will be in for cash, the remainder will be credit sale. 1/2 of the months of credit sale is collected in the month of the sale and the remainder is collected in the following month. All of the April 30th accounts receivable will be collected in the month of May. Purchase are expected to be, that is going to be a pattern. The inventory in the budget is there, selling and distribution expenditure is there. The notes payable as of 30th of April will be paid for during the month of May with $100 as interest. A new refrigerator equipment costing 6,500 was purchased for cash in the month of May, and so on and so forth. And they say calculate the expected cash collection for May, cash disbursement, cash budget, and then cash budget for the month of May, and prepare budgeted income statement for the month of May as well as the balance sheet for the month of May. Let us look at all this. Very simple and straight. Let us look at all this only for the month of May out there. I am going to keep the same way. I am just going to operate my slides in the same way. Since it is going to be only for 1 month, let us keep it this way. Keep this a little more bigger. So, let us look at first thing, schedule of cash collections for May. What is the cash sales for May? The problem says sales budgeted is 2 lakhs for the month of May. Of these, 60,000 will be for cash. So, that means moment you have the cash sales, you are going to collect that 60,000 in cash out. Now, out of the credit sales of May, how much are you going to collect? That is collection from credit sales of May. What is the collection that you are going to have? Because you say total sales is 2 lakh, cash sales is 60,000. That means 2 lakh minus 60,000, 1,40,000 is credit sales in the month of May. Let us get that clear. 1/2 of the month's credit sale is collected in the month of sale, remainder in the following month. That means in the month of credit sale, what is the total credit sale in the month of May? 1,40,000. We did calculate 2 lakh minus 60. How much are you going to collect in the month of May? 0.5, 70,000 I am going to collect. Next I have collection of accounts receivable. Because basically they say that all of April 30th accounts receivable will be collected in May. What is the accounts receivable in the month of May? 54,000 is the accounts receivable in the month of May out there. So, what is the total cash collection in the month of May out there? The total cash collection in the month of May is 1,84,000 is the total cash collection in May. Let us look at the next question out here. Cash disbursement for the month of May. Let us look at schedule of cash disbursement for the month of May. Let us go back to the problem. Purchase of expected inventory is 120,000 in the month of May. These purchases will all be on account, that means on credit. 40% of all purchases are paid for in the month of purchase. The remaining in the following month. That means let us look at in this particular case what is the payment for credit purchase in May. Payment for credit purchase in the month of May out there. If I look at payment for credit purchase in the month of May, what is the purchase in the month of May? 1,20,000. It says 40% is paid for in the month of purchase. This is what you have paid in the month of purchase. All of April 30th accounts payable to suppliers will be paid in May. That is payment on accounts payable. What is accounts payable for the month of May? 63,000, as you can see from the balance sheet. So, what is the total disbursement for the month of May? That is total cash disbursements for May is so much. This is what we call it as total cash disbursement for the month of May. Next, what does he talk about? Prepare a cash budget. Let me look at cash budget for the month of May. Cash budget for the month of May. Let us look at the cash budget for the month of May. Let us start with what is the opening cash balance you had? That is opening cash balance in the month of May. 9,000. Now, cash collection in May. Cash disbursed, that is total cash available. If I look at this, is the total cash available for the month of May. Next, let us look at what is called as less cash disbursement for purchase. What is the cash disbursement for purchase? This is the cash disbursement for purchase. You see this? Selling and administrative expenditure for the month of May is at 72,000. Less selling and administrative expenditure. How much is it? 72,000. Exclusive of depreciation. So, 72,000 is cash outflow what you have. Note payable as of 30th in the balance sheet is paid for out there. Let us come back to that. A new refrigerator was bought, what is called as less purchase of equipment. What is the equipment for purchase for cash? So, let us look at excess cash available after disbursements. We will come back to that. Sir, that interest, we will come back to that. This is the cash available. This is the cash I paid for purchase. This is the cash I paid for admin. This is the cash I paid for equipment. So, this is the excess cash that is available. Now, let us go further. Notes payable for the month of April, the balance sheet was paid with an interest of 100. What is the notes payable? 14,500 was paid off. They also say during the month of May, the company will borrow 20,000 from the bank and give a new note payable. So, I would say new borrowings is due 20,000 minus old borrowings or note payable paid. Note payable paid. What is it? 14,500. That is what, if I remember right, 14,500. Less of old note borrowing, I would say, less note payable paid. That is all I would say. Next, less interest on the note payable. 100. Sorry. So, what is the net cash balance available? Final net cash balance available. Net cash balance available. 3,500 is the excess cash I have. I borrow 20,000. I pay 14,500. I pay 100 interest. So, this is the net cash balance that is available to me at the end of the period out there. This is the net cash balance that is available to me. What does it say? Prepare a budget and income statement and balance sheet. Let us look at budget and income statement for the month of May. Budget and income statement for the month of May is what we will have to look at preparing. Now, let us sort of see how it takes shape out there. What is the income statement? First thing, sales for the month of May. What is the sales? We have the sales figure given out here. The sales is, total sales is 2 lakhs. What is the COGS? What is the COGS out there? Cost of goods sold. For that, we look at a lot of things. That means how much of material have you procured, bought? Let us see that. First thing, your beginning inventory. I'm going to move this to the next column. Sorry. What is the opening inventory? Please note, from the balance sheet, you had an opening inventory of 30,000. You might have purchased. What are we looking at in the P&L? How much has been utilized? That is, those that have been consumed. Purchase of material for the month. Of course, yes, 1,20,000 purchased. Total material available. $1,50,000. They also say inventory balance at the end of May 40,000 less ending inventory 40,000. So, what is happening? Total material consumed is what we are looking at out here. That is 1,50,000 minus this 40. This is the total material that is consumed out there. So, what happens in this particular case is my gross margin is, this is my gross margin out there. My gross margin, this is my gross margin out here in this particular case. Next, I have all these other expenditure. My selling and admin expenditure is about 72,000. My depreciation is about 2,000. That is also given out here. Then what happens? My net operating income is this minus this. This is what is my net operating income. Operating income, please note, less the interest, not the repayment, only the interest cost of 100. Sorry, interest gives me my net income out there, what we call it as the net income. My net income is 15,900 in this particular case. Next, I have the last item to be worked out. That is what they say in this particular case, balance sheet, budgeted balance sheet out here, budgeted balance sheet for the month of May. Let's go exactly in the same way out here. Assets, cash. What is the cash I have? We did calculate what is the net available cash balance, 8,900 right here. Next, they said accounts receivable accounts receivable. We go back here. What is the total credit sale? What is the total credit sales in the month of May? 2 lakhs is the sale in the month of May, 60,000 is cash, 1,40,000 is credit sales, 70,000 I have received. That means another 70,000 I am yet to receive from that 1,40,000. So 70,000 is the credit sale out there. Next, inventory. Ending inventory, we did look at it here. This is the ending inventory. Next, building, equipment, net of depreciation. What is the value of building equipment? 2,07,000 was the value of building equipment. What is the depreciation for the month? Depreciation for the month is here. So what happens? It's 2,05,000 in this particular case. Is it only 2,05,000? No. There is an addition. What is the addition? You did buy what is called as a refrigerator, purchase of new equipment. New equipment was purchased. So what happens? 2,11,500 in this particular case. So what is your total assets out there? This is my total assets. Now let us look at liabilities and stockholder equity. Same thing, I am just going accounts payable. I go back and read this. 1,20,000 is purchased, 40% is paid for in the month of purchase, 60% is paid for in the following month of purchase. So accounts payable 1,20,000 into 0.6. Notes payable. What is the notes payable? There is a new note, new borrowing, which I have basically had out here. New note, new borrowing. Yes, that is a note payable. What is the common stock? Common stock in this particular case is 1,80,000. What is my retained earnings? It was 42,500 plus I made, what do you call it, as a profit of about 15,900 this year. So let us look at 58,400 in this case. I am just going to look at the total of this. Is the same or not? Let us see. It is basically exactly the same out there. That is total liabilities and equity. In this particular case is exactly the same what you basically see out here in this case. This is what we call it as the budget out there. We have one more exercise which we will do it as we go along in the next class. Thank you.